Hi friends, today let's explore Inox Wind, which along with Suzlon is a leading entity in the India's wind energy sector. Why focus on Inox Wind? The stock has yielded returns of over 157% in the last 6 months alone, 431% in the past year, and more than 100% annually over the last 3 years. And while I was working on this video, the stock shed 100 points from its peak of Rs 645 to 545 in just a few days, a drop of more than 15%. Hence, this may be a great opportunity to invest in this stock. This analysis of Inox Wind stock will be in two parts. In this video, we will do a brief financial or quantitative analysis of the firm. My next video will go into qualitative aspects of the company in detail. First, let us review the recent financial results for this entity. Last week, Inox Wind published their annual earnings report showing a quarterly revenue of 563 crores in Q4 of fiscal year 2024, representing a 190% year-over-year growth from the 195 crores in Q4 of fiscal year 2023. The company reported an EBITDA of Rs 140 crores and a PAT of 38 crores, a substantial improvement from an EBITDA of minus 25 crores and a PAT of minus 115 crores in the previous fiscal year's fourth quarter. The revenue for fiscal year 2024 reached Rs 1,799 crores, a 139% increase year over year from Rs 754 crores in fiscal year 2023. Additionally, the loss for the last fiscal year was significantly reduced to 51 crores compared to a loss of 697 crores in fiscal year 2023. Hence, the company has seen a strong recovery and is in the high growth renewable energy sector. As we will discuss in the coming minutes, the stock has lots of promise and accordingly the stock price has gone through the roof. In this video, we will try to find an answer to the question, will this bull run continue? Will the stock continue to give high returns in the future or will it see a correction? Is the current valuation of the stock reasonable or is it overvalued? What kind of growth is expected in the coming years to justify its valuation? We hope to find the answer to these queries and we certainly have lots of interesting data to back our analysis. So stay tuned till the end. Now let's consider the valuation of the stock. The EPS for fiscal year 2024 is negative, preventing us from calculating the PE ratio. Therefore, we will examine the price to sales ratio, which currently stands at a relatively high 11.5. Given that EBITDA margins are currently at a maximum of 14 to 15%, this ratio appears really high. However, given the high growth nature of the sector and the bullish sentiment of the investors regarding future revenue and profits, this valuation may be justified. We'll attempt to quantify the future growth of the company to assess whether the valuation is justified, whether the stock has the potential to appreciate further or is likely to decline. To start with, let us look at the outlook for the wind energy market in India. The central government has big plans for renewable energy. It aims to achieve net zero carbon emissions by 2070. Toward this aim, the government has drawn out a plan to reach 500 gigawatts of non-fossil energy capacity by 2030, out of which 140 gigawatts will be derived from wind power and 280 gigawatts from solar. This will help achieve our aim of having 50% of our electricity needs coming from renewable sources by 2030. Presently, we derive about 30% of our power requirements from renewables. Coal and gas presently make up about 55% of the current energy mix. India being the third largest consumer of energy in the world, the 2030 and 2070 plan marks a historic point in the global effort to combat climate change. Currently, India generates about 45 gigawatts of wind energy. By 2030, it needs to add another 100 gigawatts of wind energy to reach the 140 gigawatts goal set by the government. Accordingly, the central government has said that they will issue tenders for 10 gigawatts of plain vanilla wind energy and 10 gigawatts of hybrid every year. Out of 10 gigawatts of hybrid, 5 gigawatts is expected to be hybrid wind. And this is only from the central government. Then there are state governments, retail, commercial and industrial players, independent power producers and green hydrogen sector as well. So growth is going to be tremendous in this sector in the coming years. It is estimated that from this year, we are going to see 10 gigawatts plus of tenders every year. While Inox Wind continues to bid for these tenders, it has an order book of 2.7 gigawatts already in place for execution. As per the company estimates, they are fully sold out for the next 2.5 years. This means they are fully occupied with executing their existing order book for the next 2 to 3 years. To quote the official guidance figures provided by the management, Inox Wind is expected to deliver about 800 megawatts of power in fiscal year 2025 and 1200 megawatts in fiscal year 2026. If their plan succeeds, they expect a revenue of rupees 5,000 plus crores in fiscal year 2025 and about 8,000 plus crores in fiscal year 2026. So based on the current stock price, their forward price to sales ratio should be around 20,000 by 5,000 equal to 4 in fiscal year 2025 and 20,000 by 8,000 which is 2.5 in fiscal year 2026. To estimate the forward PE, let us assume the Inox Wind achieves an NPM of 12%. This is considering the fact that management expects to achieve an EBITDA margin of 14 to 15% in fiscal year 2025 and fiscal year 2026. Also, they have a firm goal of going net debt free in the first half of fiscal year 2025, that is this year, when the interest bearing debt for the company will become zero. While arriving at the 12% NPM, I have also considered the fact that the net profit margin for Inox Wind's competitor Suzlon for the last quarter was 13%. So we expect the earnings to be 5,000 into 0.12 or roughly around 500 to 600 crores for fiscal year 2025, depending on how soon they get rid of their interest bearing debt. 500 crores of earnings translates to a forward PE of 20,000 divided by 500 which is 40 by the end of this fiscal year. For fiscal year 2026, we expect about 8,000 into 0.12 which is 960 crores of earnings. This translates to a forward PE of 20,000 by 960 which is 21. Post fiscal year 2026, Inox Wind may deliver upwards of 1,500 megawatts or even 2,000 megawatts every year. They already have the required manufacturing capacity of 2,500 megawatts and also a project site inventory of 5,000 megawatts coupled with 1,800 megawatts of transmission infrastructure, which is ready for quick plug and play commissioning. This 5,000 megawatts land bank built over a period of 10 years is a key moat for Inox Wind, which none of the other players in the wind energy here in India have. In coming years, Inox Green Limited, a subsidiary of Inox Wind, providing operations and management or O&M services for wind turbines and related infrastructure, is expected to add significantly to the earnings of Inox Wind. While Inox Green has a portfolio of 3.2 gigawatts at present, it is expected to service nearly 6 gigawatts of wind energy infrastructure by fiscal year 2026. The wind O&M services or subscription-based business requires no capex at all, while operating margins are as high as 50%. The contracts for O&M are long-term, lasting anywhere between 5 to 20 years. The management aims to scale Inox Green into a 10 gigawatts player in the next 3 to 4 years with a continuous EBIT of 500 crores every year. Inox Wind has a promoter share of 55% in Inox Green. Hence, Inox Wind's profit margins are destined to improve due to its subsidiaries' earnings in the coming years. Considering these estimates and also taking into account the growth prospects for this sector, the current stock price does not look pricey to me. According to Devansh Jain, the founder of the Inox Wind, they have only scratched the surface of what is possible in the upcoming years. This is merely the start of a long journey ahead. If the company manages to deliver on its promise of 100 to 150% year-over-year growth in the next 2 years with strong profitability, the stock can be expected to rise significantly higher than the current price. In this video, we talked about valuation ratios for Inox Wind and tried to connect the same to financial performance and future revenues of the business. I'll post a separate video this week where I do a qualitative analysis of Inox Wind. So if you do like this video, subscribe to my channel and hit the bell icon to be notified of my new videos. Thanks for watching. Have a great day.